Hi, today we're going to have a look at the 2014 Leaving Cert higher level question 1 sole trader. As with all the question 1s, we are given a trial balance and then we are given some adjustments that we have to include in a P&L and balance sheet. So to start off, we're going to have a look at the 9 adjustments and then we're going to do our P&L and our balance sheet. So the first adjustment, it says that stock at the end of the year cost 80,000. No record, however, had been made for goods in transit at the 31st of the 12th. The invoice for these goods have been received, showing the recommended retail selling price of 4,800, which is cost plus 20%. So that 4,800 is 120% of the cost price. So this goods in transit note comes up a lot. So what we have to do for goods in transit is we have to add it to closing stock because we purchased the goods before the end of the year. We have to add it to creditors because we owe the creditors the money for the goods. And we have to add it to purchases because we purchased them this year, so they should be included in this year's accounts. Goods in transit are goods that we bought before the end of the year but just haven't been included in the accounts so far. So the first thing that we need to do is to work out the cost price of the goods, because it's the cost price we're going to add to the closing stock, creditors and purchases. So the selling price of the goods in the question, it says is 4,800, and that's cost plus 20%, which is 120%. So the cost price would be 4,800 divided by 120 multiplied by 100. The cost price is 4,000. So for closing stock, so per note 1 in the question, it says that closing stock was 80,000. So I'm going to have to add on the goods in transit of 4,000, which will leave me with closing stock of 84,000, and closing stock will go on cost of sales in the P&L and will also be a current asset in the balance sheet. Creditors from the trial balance is 110,000, and again I'm going to have to add the goods in transit of 4,000, which will leave me with 114,000, and I won't write where that goes yet because there's more adjustments later on. I'll only write where it goes when we have the final figure. And purchases also, from the trial balance we can see that purchases is 530,400, and again we're going adding goods in transit of 4,000, which will leave me with 534,400. And that's note 1 done for the goods in transit. Note 2 is a note that comes up almost every year. It's where we sell a van and buy a van. So for note 2 we actually need 6 notes to complete this. So the first 2 notes always are to do with the old van. We need to see whether we made a profit or loss in the old van, but before we can see whether we made a profit or loss, we have to get the depreciation of the old van. So to get the depreciation of the old van, we have to see how long we had that van for. Well, we purchased it on the 30th of the 9th, 2010 and sold it on the 31st of the 3rd, 2013. So we had it for all of 2011 and all of 2012, which is 2 full years. And then we had it for 3 months in the year we bought it and 3 months in the year we sold it, which would be 6 months. So in total, we had it for 2 years and 6 months. So the van we sold cost us 40,000 and the depreciation rate is 10%, which would give us 4,000, and then for 2 years gives us 8,000. And then for the 6 months, it was 4,000 for a year. So 4,000 for the year. If I divide that by 12 and multiply it by 6, it'll give me the 6 months, which would mean my total depreciation on the old van would be 10,000. Now I can see whether I made a profit or loss in the old van. So as above here, we said that the cost of the old van was 40,000. The depreciation I'm after working out to be 10,000, which will leave me with a net book value of 30,000. So the old van was worth 30,000. If I go back to the question, I can see I got an allowance of 16,000 off the new van. So if it was worth 30,000 and I got an allowance of 16,000, I've made a loss of 14,000, which will go in selling and distribution expense in the P&L. The third note we'll always do when we're doing this depreciation or the buying and selling of the van, the third note we'll always do is cost of delivery vans. which is a straightforward note, we can see that from the trial balance, the cost of delivery vans was 90,000 here. So it's 90,000, and we're going taking away the cost of the van we sold, which was 40,000, and we're going adding in the cost of the van that we bought, which was 46,000. So in total, the cost of the vans should be 96,000, and that's what's going to go in the fixed asset note in the balance sheet for cost of vans. The fourth note we'll always do. The fourth and fifth note are to do with depreciation. The fourth note will be depreciation for the year, and the fifth note will be accumulated depreciation. So for the depreciation for the year, we have to see when the buying and selling of the vans took place. So it took place at the end of March in 2013. So the first 3 months of the year, the cost will be the same as it was in the trial balance in 90,000. And for the next 9 months, we can see here when we sold the van and bought a van, the cost came to 96,000. So it's going to be 96,000 for the next 9 months. So for the first 3 months, it's going to be 90,000 by 10%. And then I'm going to multiply that by 3 over 12 to work out 3 months. And for the next 9 months, it's going to be 96,000 multiplied by 10% multiplied by 9 over 12. So in total, the depreciation of vans for the year should be 9,450. The accumulated depreciation of vans. I can see from the trial balance that the delivery vans cost 90,000 and are now worth 78,000. So they must have been depreciated by the difference, which is 12,000. I'm going to add my depreciation for the year because that's not included in the accumulated depreciation because it was a note. And we just have to remember to be careful to take out the depreciation of the van that we sold because we don't have that van anymore. So the depreciation shouldn't be there. So I'm going to take out the depreciation of the van that we sold of 10,000, which will give me accumulated depreciation of 11,450, and again that will go in the fixed asset note in the balance sheet. So, and the last note, the sixth note we have to do, at the end of note 2, it says that the check for the net amount of the transaction was entered in the bank, but was incorrectly treated as a purchase of trading stock. So this wasn't a purchase in the normal course of business, it was a purchase of a fixed asset, so it shouldn't have been included in purchases, so we have to take it out. And it was the net amount, which means if it cost 46, if the new van cost 46, and we got an allowance of 16, what we actually paid was 30, and that's what was included in purchases. So purchases, from note 1 we've already had a change to purchases, so I'm going to take my most up-to-date purchases figure, which is 534,400, and I'm going to take out the net amount, which we said was 30,000, to 46 minus 16, which will leave me with purchases of 504,400, and that is note 2 done. The next note we're going to have a look at is note 3, and that's the suspense note. And again, this is usually similar enough when it comes up. The first part is about mortgage interest, and then the second part is where they put it into one account and not another usually. So to read this, the suspense arises as a result of an incorrect figure for mortgage interest, although the correct entry had been made in the bank account. So that's the first thing we're going to have a look at, the mortgage interest. So what that means is that the mortgage interest in the accounts is wrong. So if I go up here and look at my mortgage interest for the first 3 months, that 1,500 is incorrect. We have to work out the right figure. So I'm going to have to do a note on mortgage interest. Now, when we're doing the note on mortgage interest for the first 3 months, we may as well do the rest of the year because the 9 months is going to be mortgage interest due, and then the total mortgage interest for the year I'm going to need for the bottom of the P&L, although I think there's a change to this later on for drawings or something. So for the 3 months, anyway, again, if I go back, just have a look at the mortgage. It says that the mortgage was 200,000, but that includes 60,000, which was received in the first of the fourth. So for the first 3 months, the mortgage would have been 140,000, and then it went up by 60 to 200,000 for the next 9 months. So for the first 3 months, mortgage was 140,000 by 6% by 3 over 12. And then for the next 9 months, it was 200,000 by 6% by 9 over 12. So the total mortgage interest for the year is 11,100. So the mortgage interest above, we're saying it should be 2,100. Now if we go back to the trial balance, for the first 3 months it should be 2,100. In the trial balance for the first 3 months, it's 1,500, which will leave me with an error of €600. Now, to see whether we should be adding or taking away that €600 to suspense, the easiest way to do that is through T accounts. So I'm going to set up a little mortgage interest 3 months, a T account for that. And again, when I'm doing these T accounts, I'm going to always start off with the figure from the trial balance. So from the trial balance, I said it was €1,500, and the other account that's going to be affected are salaries and general expenses. And if I go back to the trial balance, I can see the salaries and general expenses is a debit balance of 90,000. Okay, so this €1,500 we're saying here should be €2,100. So to get it to €2,100, I'm going to have to debit it with 600. Now that totals 2,100. I'm just going to put the opposite. So if 600 is a debit balance here, it's going to go into the opposite side of suspense. If it was a credit balance here, it will go to debit in suspense. The second part of the question says, if I go back to note 3, and there was 2,000 paid towards PAYE, PRSI, USC entered only in the bank account. Okay, so the two accounts here we're talking about are PAYE, PRSI, and USC. So I'm just going to start off again by putting in the trial balance amounts for those. So PAYE, PRSI, USC is a credit of 3,800, and bank is a credit of 16,400. Okay, now the question says that there was 2,000 paid towards PAYE, PRSI entered only in the bank. So if they're paying PAYE, PRSI, USC, what should have happened is in bank you debit what comes in, you credit what goes out. So here in grey we can see what should have happened. They should have credited bank and they should have debited PAYE, PRSI, USC, bringing down their liability for that. It was entered only in the bank account, so the bank account is okay. It wasn't entered here in the PAYE, PRSI, USC, so I'm going to put it in there, and again it will go in the opposite side of my suspense account. So now I have my T accounts done, I just need to do up the notes. So the first note, I don't need to do a note on mortgage interest because I've included the correct figure, the 2,100 here in my mortgage interest note, so mortgage interest is fine. I need to do a note on salaries and general expenses, including suspense. So I can see here from a little T account from the trial balance, salaries and general expenses is 90,000 of a debit. The entries I've put in are credit entries, so they're going to reduce that. So for the PAYE, PRSI, USC, it's going to reduce it by 2,000, and for the mortgage interest, it's going to reduce it by 600, which is going to leave me with salaries and general expenses balance of 87,400, and that is an admin expense in the P&L. The PAYE, PRSI, USC from the trial balance is a credit balance of 3,800. I put in a debit entry of 2,000, which is going to reduce that. So my salaries and general expenses are going to be, my PAYE, PRSI is going to be 1,800 of a credit balance, and that will go in liabilities less than 1 year in the balance sheet. And I don't need to do a note on bank because it was entered correctly in bank. Note 4 says, goods with a retail selling price of 1,500 were returned to a supplier. The selling price was cost plus 20%. So these are purchases returns. The supplier issued a credit note showing a restocking charge of 10% of cost price. No entry has been made in respect of the restocking charge. Just restocking charge. Okay, well the first thing we're going to have to do is get the cost of the goods, because the restocking charge is a percentage of the cost of the goods. So in the question it tells us that the selling price of the goods was 15,000, and that is cost plus 20%. So if the 15,000 is 120%, if I get my 15,000 divided by 120, multiply that by 100, gives me a cost price of 12,500. Now, it says in the question, it says that the restocking charge is 10% of cost. So if the cost price is 12,500, the restocking charge is 10% of that, which is 1,250. So now what do we do with the restocking charge? The restocking charge is just treated like a purchase. So you just added the purchases and we added 2 creditors. So from note 2, we can see that the restocking charge sorry, the most up-to-date purchases figure is 504,400. And I'm going adding my restocking charge of 1,250, which now gives me purchases of 505,650. Creditors, again, we've already changed creditors per note 1, so I'm going to take that figure. So my creditors per note 1 is 114,000, and again, I'm going to add on my restocking charge of 1,250, because we were charged this restocking charge, so it's going to increase the creditors. So now my creditors come to 115,250, and that's the last time we have to adjust creditors. So creditors will go as liabilities less than 1 year in the balance sheet. Note 5 says that provision be made for mortgage interest due. So we have to work out the mortgage interest due, and we've done that already in note 3 in the suspense note. And 25% of the mortgage interest refers to the private dwelling. So we can see up here in note 3, I've worked out my mortgage interest due, which is 9,000. Now it's saying of the mortgage interest for the year, of that 11,100, 25% of that is for a private dwelling, so 25% of it is drawings. So for mortgage interest, I'll go back up to note 3 here, and it was 11,100. But if 25% of that has to do with drawings, I'm going to have to take out 25%, which is 2,775. So now my mortgage interest for the year is 8,325, and that's the figure that we'll subtract at the bottom of the P&L. And I'm going to have to add this 2,775 into drawings. So from the trial balance, I can see the drawings. If I go back to the trial balance, I will see the drawings are 41,250. If I have a look back here, 41,250. And I'm going to have to add the 2,775 for the drawings of the mortgage interest, which will leave me with drawings of 44,025. The next note we have to look at is note 6, which again is a note that comes up a lot. It's patents which incorporates 3 months investment income are to be written off over 5 years starting in 2013. So there's 3 months investment income included in patents. So we have to take that out of patents. But investment income is a credit balance, because income is a credit balance. Patents are an intangible asset, which is a debit balance. So if I take out a credit balance, it's going to increase my debit balance. So when I take out the investment income, the credit, it's going to increase my debit of patents. So the first thing I need to do anyway is to work out the 3 months investment income. And again, similar with the debentures, we may as well do the investment income for the year when we're doing this calculation. So if I have a look at my investments here from the trial balance, I can see they're 3% investments. They're 100,000 is the value of them, but we only got them on the 1st of April, so we only had them for 9 months. Now 3 months are incorrectly included in patents, so I need to work out the 3 months, and then I need to work out the other 6 months to give me the 9 months in total. So for the first 3 months, it's 100,000 by 3% by 3 over 12, and for the next 6 months, it's 100,000 by 3% by 6 over 12. So in total, the investment income for the year is 2,250. And that investment income will go in operating income in the P&L, and the 6 months that's due to us is going to be a current asset in the balance sheet. Now, the patents from the trial balance, if I go back and look at the patents in the trial balance, they are 40,400. Now, I need to take out the 3 months investment income, but as we said, taking it out means adding it on. So I'm just going to add on the 3 months here of 750, which will leave me with a correct patents figure of 41,150. That's going to be written off over 5 years. So if I get my 41,150 and divide that by 5, will leave me with patents written off of 8,230, and patents written off as an admin expense in the P&L. So we said above here the correct figure from the trial balance for patents should be 41,150. And now I have to take away the patents as written off, the 8,230, which will leave me with my intangible asset in the balance sheet my patents should be 32,920. And that's note 6 complete. Note 7 is to do with revaluation. First of all, though, it says provide for depreciation of buildings at 2% of cost per annum, and then it was decided to revalue buildings at 720,000 at the end of the year. So the first thing we need to do is to work out the depreciation of buildings. Well, the buildings cost, we can see the cost of buildings if we go up here to the trial balance. The cost of buildings are 640,000. So the cost of buildings are 640,000. The depreciation rate on buildings is 2%. So the depreciation for the year, 640,000 by 2%, is 12,800. And that 12,800 for depreciation of buildings is an admin expense in the P&L. To work out the revaluation reserve, we have to, first of all, we get the new cost minus the old cost. So they're being revalued at 720,000. They were 640,000. Which is an increase of 80,000. Now we have to add back the depreciation for the year here of 12,800, and we also need to add back the accumulated depreciation, which we can see is the 640 minus what they're worth now at the start of the year, 545. So 640 minus the 545, which is 95,000. So if I add those three figures together, it will give me my revaluation reserve of 187,800, and that will go in the finance by part at the bottom of the balance sheet. Note 8. It says goods withdrawn by the owner for private use during the year with a retail value of 3,000, which is cost plus 25%, were omitted from the books. So again, this is to do with drawings of stock, and the drawings of stock will be valued at cost price. So to do the note on this, again, I'm given the selling price here in the question, and the selling price was €3,000, and that is cost plus 25%, so that's 125%. So to work out the cost price, I'm going to divide it by 125 and multiply it by 100. The cost price was €2,400. So that €2,400, we're going to take it out of purchases because it wasn't the company's purchases, and we're going to add it to drawings because it was goods he took for his own use. So the most up-to-date purchases figure, I'm going to go back to note 4 to get that. So my most up-to-date purchases figure is 505,650, and I'm going to add, so I take away the drawings of the stock, which is minus 2,400, and that will leave me with purchases of 503,250. Drawings, again, there is an adjustment to drawings already in note 5. So if I go back to note 5, drawings at the moment is 44,025. And I'm going to add the drawings of the stock of 2,400, which will leave me with total drawings of 46,425, and that will be included in the finance by part at the bottom of the balance sheet. And the last note 9 says a cheque for 800 has been received in respect of a debt of 800, so we actually got the whole debt, which is previously written off as bad. Sometimes you don't get the whole debt, and there's a couple more notes you need to do. No entry was made in respect of this transaction. So the first thing we do anyway, we got €800. So currently our bank overdraft for the trial balance is 16,400. And if I received €800, that's going to reduce my overdraft by 800, which will leave me with a bank figure of 15,600, which will be included in liabilities less than 1 year in the balance sheet as it is a bank overdraft. And the bad debt recovered, the 800 I got, is going to be included in operating income in the P&L, because previously we had this written off, now we're actually going to get it, so it's going to be included in operating income in the P&L. And that is the notes complete. Now we have to do the accounts. So to start off with the accounts, the first thing I'm going to do is start off with sales. Always with the P&L, we start off with our sales. Now there was no change to sales in the notes, I don't believe. So the sales figure is just going to be coming directly from the trial balance, 695,000. So if there's no change to the figures, it's coming directly from the trial balance. If there was a change, it will come from the notes. So opening stock, there should never be a change to opening stock, so that's going to be from the trial balance 64,200. Purchases, we've made a few changes to purchases, so if you make a few changes to a figure, just make sure you use the most up-to-date one. So from note 8 is 503,250. So opening stock plus purchases gives me 567,450, and then I just need to take away my closing stock, and there was a change to closing stock, so I'm going to get that from the notes, and my most up-to-date or recent figure for closing stock is actually from note 1, 84,000. So 567,450 minus 84 will leave me with cost of sales of 483,450, and then sales less my cost of sales will leave me with a gross profit of 211,550. I'm now going to add my operating income, and the only operating income I have is the bad debt recovered from the last note. The bad debt recovered was €800. So if I add that on to my gross profit, it leaves me with 212,350. Now I have to take away my expenses. So I have two different types of expenses. Admin expenses are my general expenses, and selling and distribution are any expenses which have to do with sales or distributing the product to customers. So my first admin expense is going to be patents written off, and again I calculated patents written off in my notes. So patents written off is 8,230. Salaries and general expenses was where suspense was included, so I need to go back to my note 3 on suspense to get my salaries and general expenses figure, which is 87,400. Rent, there was no change to rent, I don't think, so that's going to come directly from the trial balance. And again, we have to be careful with rent, because with discounts, with rent and with commission, there are three accounts we need to be careful with, as they can be either income or expenditure. They can be debit or credit balances. Rent here is a debit balance of 10,000, so it is an expense of 10,000. Insurance, there's no change to insurance, so that's coming directly from the trial balance of 5750. And depreciation of buildings I worked out in my revaluation note. So if I go back to my note on revaluation, I worked out my depreciation of buildings for the year, 12,800. So my total admin expenses come to 124,180. I now need to work out my selling and distribution expenses. So the first one is advertising, and again I don't need to any change to advertising during the year, so it's coming from the trial balance of 2,500. The loss on sale of van I worked out in note 2, where I bought and sold the van. So if I go back to note 2, I can see that the loss on the sale of the van was 14,000. Depreciation of vans for the year I also worked out in note 2. They were 9,450. And the discount, again, if we look at the discount, it's a net account, so it could be a debit or a credit, but it's a debit balance here, which means it's an expense of €1,800, so it's a selling and distribution expense. So in total, my selling and distribution expenses come to 27,750, giving me total expenses of 151,930. So if I get my profit above here and I take away my total expenses, leave me with an operating profit of 60,420. And to that, I need to add my investment income. And again, I have a note done in investment income where I did my patents note. So that was note 4 or 5 here. So I'm going to add my investment income for the year, which is 2,250. So that will bring me to 62,670, and I need to take away my mortgage interest, which I've done in note 3, my suspense note. And sorry, we actually had a change to mortgage interest after that, because some of the mortgage interest was to do with drawings. So my mortgage interest is actually 8,325. So if I take away the mortgage interest, it'll leave me with a net profit for the year of 54,345. Now onto the balance sheet. So the first thing in my balance sheet are going to be my intangible fixed assets and my patents. So I've done a note on intangible fixed assets or patents. It is note number 6. So after I take away my patents written off, my intangible fixed assets or patents come to 32,920. So my tangible fixed assets, my buildings were revalued to 720,000 at the end of the year, so they have cost 720,000. And we took out the depreciation of buildings, so the cost or the net book value of buildings at the end of the year should be 720,000 because they were revalued at the very end of the year. The cost of delivery vans I worked out in note 2 after I bought a van and sold a van. The cost of delivery vans were 96,000. And I also worked out my accumulated depreciation of delivery vans in note 2. They came to 11,450. So my net book value was 84,550, and now I just need to add these down. So the cost comes to 816, and the net book value 804,550. And now I'm just going to add on my financial assets or my investments, which are coming directly from the trial balance of 100,000, which will leave me with total fixed assets. If I add my intangibles, my tangibles, and my financials, the total fixed assets comes to 937,470. So current assets, closing stock will always be in current assets, and I just have to take the correct closing stock figure, which was a change in note 1 of 84,000. Debtors, again, I think I had a change to debtors in the notes here. So if I go back to my debtors, where debtors changed, the debtors with the trial balance were 50,000, and I made a change to them. So the debtors figure of, had we made it, I just can't see the change we made to debtors in the accounts. So if we go back through my notes quickly and just see what was the change to debtors. Oh, sorry, maybe it was just a bad debt provision. Is there a yes, there's a provision for bad debts here, so that just has to be included along with debtors. So my debtors was 84. Sorry, my debtors, if I take my debtors from the trial balance, so the debtors from the trial balance were 50,000. And I just have to take away my provision for bad debt. So there's no change in the notes. So I can see from the question here, the debtors are 50,000 and there's a provision for bad debts of 1,400, which has to be just taken away from the debtors. So that will leave me with debtors of 48,600. And again, I might just put this closing stock figure in the middle column to make it easier to calculate. And the last thing that's going to go in my current assets are my investment income due. So the investment income due, again, I've worked out the investment income due. That's in my note with the patents. So investment income due is the 6 months that I am still owed, which is the €1,500. So in total, my current assets come to 134,100. I now have to calculate my creditors' amounts falling due within 1 year. So the creditors will always be included here anyway. And again, I just have to make sure I have my most up-to-date creditors figure. which from note 4 is 115,250. My bank overdraft will be included here, and I changed that in the very last note. So my bank overdraft figure is 15,600. VAT, there's no change to VAT, so that's just coming directly from the trial balance of 4,200 euro. My VAT is 4,200 euro. There was no change to that figure. PAYE, PRSI, USC, that was changed in my suspense note. So I need to go back to note 3 and get the figure for PAYE, PRSI, USC was 1,800. And the mortgage interest due. I worked out the mortgage interest due part in the note on suspense. So the mortgage interest due was the 9 months of 9,000. So in total, my creditors' amounts falling due within 1 year come to 145,850, and that will leave me with a working capital of minus 11,750. So that minus 11,750 I have to add on to my total fixed assets above, which leave me with 925,720. Now just to complete the bottom part, that gives me total net assets. So to complete the bottom part of the balance sheet, first thing I'm going to start off finance by is my heading, and the first thing underneath that will go creditors amounts due within 1 year, or sorry, after 1 year. So that's just my mortgage from the trial balance of 200,000. Capital and reserves. My capital figure I'm going to get from the trial balance. Also capital here, I can see the very last figure is 530,000. My revaluation reserve, I have a note done on revaluation reserve. So if I go back to my notes, and note 7 revaluation reserve is 187,800. And I'm going to also add on my net profit, which is just going to be my final figure for my P&L of 54,345. So they come to 772,145, and I'm just going to have to take away my drawings figure now. So my drawings figure from note 8 is 46,425. So 772,145 minus my drawings of 46,425 leaves me with 725,720, and then that added to my creditors' amounts due after 1 year, leaving me with capital employed of 925,720, and we can see here now that my balance sheet is balanced. So I hope that was helpful on how to answer the question 1s, and if you want to watch some more videos, please subscribe to my YouTube channel. Thank you.